just so we can be cognizant of everybody's time. Um, we are welcoming a presentation regarding FEMA and SBA this morning. So I will go ahead and actually thank all of you for joining this morning. As I was telling Mary, we have a standing meeting with our sub-agencies every month, really to go over some updates and just some resources and news that we share. So we are very grateful for you all to be able to present to our agencies regarding disasters and different resources that are out there that they may not be aware of. So we are very grateful for you to present again. We were lucky enough to have your team or your partners present to us, and we thought, oh my gosh, not everybody was able to participate. So we really thought that this would be a good presentation with some of the disasters that we've had here in Michigan. Brian, I will let you go ahead and introduce yourself and continue the flow of presentations. I think that it's best if you kind of share your expertise with the group. And so I will turn it over to you.
Thank you, Tara. Good morning, everyone. And I am sharing my screen, so can everyone see the single screen? Okay, cool. Good morning, everyone. I'm Brian Killen. I'm with FEMA Region 5 Mitigation Division. I specifically work in the floodplain management and insurance branch. I'm a senior floodplain management specialist. But I was also involved in the Southeast Michigan disaster as the hazard mitigation branch director last year due to the flooding event there. So today, the way it'll work, I'll go over FEMA mitigation, and then I'll jump over to Katie, who'll talk about FEMA public assistance. FEMA individual assistance, our colleagues couldn't be on today because of training, but we'll touch on that. I'll touch on that a bit best I can, and then hand it over to Kathy, who can, well, because disaster assistance is really, individual assistance and SBA are grouped together in that disaster assistance sequence of delivery. So, but I'll jump right into, like I said, I'll talk about mitigation in our programs. Also, here are all the contact out, but so you'll have that. So FEMA mitigation is one of the interesting, well, all our programs are interesting, but in terms of its makeup, mitigation is kind of hobbled together various program areas and various regulations. So, we administer grants and floodplain management, and we make flood maps, and we also have environmental and historic preservation. So it's really a mix of different topics and disciplines. So, but in terms of our authority, it mainly comes from the National Flood Insurance Program, which allows us to administer, or allows us to, communities to join the program and then allow residents to get flood insurance. And then the big one for emergency management and response and recovery is the Stafford Act, which allows us to issue public assistance and individual assistance and things like that. So what is mitigation? So mitigation mitigation itself is really variable too. It's any sustained action that will help reduce the risk of future impacts from future hazards. So it could be putting in a rain. You can see even the pictures. Putting in restoring a wetland, or putting in green infrastructure in an urban area, or our kind of bread and butter mitigation items are elevation and demolition and acquiring properties to move them out of the floodplain. So you can see there one of the pictures of elevated structures along the Mississippi. So just as varied as mitigation, the benefits of mitigation, but we're really trying to prepare communities to be more resilient from disasters, reduce their future risk, make them ultimately more sustainable, both financially and in terms of livability. But when we talk about mitigation to disaster survivors, and that really is our focus here, post-disaster. Um, the scales are different too, because for mitigation, we work with individuals, but also with communities and counties and states. So, it kind of runs the gamut of stakeholders here. But when we talk to disaster survivors, we deliver information that's oriented around homeowners, neighborhoods, and whole community. So types of FEMA mitigation, as I already mentioned, the National Flood Insurance Program allows communities to offer flood insurance to their residents. But we also have grant programs, which allow applicants, sub-applicants, which are communities, to request grant funding to do a host of things. It depends on what the needs are. But we also offer technical assistance. So does a community need help trying to figure out how to work through the grant process, or do they need help understanding what is this floodplain management issue that they have with a particular structure? So we do offer that as well. So how does a individual or community access FEMA mitigation? So for insurance, it's really up to the residential or commercial property owner. If they want insurance, the only caveat is that community has to participate in the program. Communities and tribes and territorial governments can, for grants, can be sub-applicants. They go through the state on that. And then technical assistance is offered both to individuals and communities through either disaster assistance, like our disaster recovery centers, when a disaster is active, and then or directly to the region. We have a mitigation and email. Anyone can email us directly, and we can offer assistance at any time. But the main thing is, for any entity, government entity, and really to help your residents and property owners understand, are they in the floodplain? That's kind of the first stop. To understand that, understand where you get that information. So if the structure is in the special flood hazard area, that triggers a lot of regulatory requirements, or and if the community participates in the National Flood Insurance Program. But we have a map service center and we have a national flood hazard layer. Kind of the first stops, you can enter the address. It'll tell you the properties in the floodplain, in the regulatory floodplain. You can see here in the image, it's the blue area. It's often we say blue area versus the orange area, which is the orange areas are typically they're floodplain, but they're lower risk in terms of regulations. So I'm going to talk a lot about basement flooding too, because in terms of mitigation, that will seem to be the focus of the Southeast Michigan disaster. So it's really important. That's kind of top of mind right now, is how do we educate homeowners and communities about the issue of basement flooding? Because in that event in Southeast Michigan last year, we had over 100,000 applicants apply for individual assistance because they were impacted in some way by sewer backup or basement flooding, which is a huge event for us in terms of the IA. I'm not aware of any other IA event that in the recent past that rose to that number of applicants. So, we're trying to. The challenge is educating about basement flooding. There are things homeowners can do to prepare themselves, inevitably for the next, especially if you're in the urban area. Things change slowly over time in urban areas, whether it's infrastructure or educating homeowners. But we find that basement flooding really comes from three things, right? Sewer backup, so the water is backing up from the sewer system, foundation issues, or issues with how the yard is graded, right? Is the water flowing away or towards your home? So when we talk about on-property issues, mitigation really could be, when we start talking about those green infrastructure type of things, disconnecting your downspout. With these type of things, we're trying to store, the idea is to store more water on property. Because when all the homes and the businesses are sending their overflow and are draining directly to the sewer system, that does create a heavy burden in terms of volume on a municipal sewer system that can create overflows and backups, and then we get overflows into rivers. We get backups in the home. So these incremental ideas about, being a little more aware of what your property can do to slow down and help water infiltrate on site is a really important component to stormwater mitigation. Another, and as we move inside the home, there are things that can be done as well to help mitigate from flood damage. Home utilities is a really important one because um, home utilities, hot water heater, furnace, or make the home safe and habitable. And so we need to protect those utilities. So hopefully, educating homeowners about elevating those systems, either off the basement floor or to a different floor, are really valuable tools to making a home make sure to ensure a home is safe, sanitary, and functional. And we have resources about protecting building utilities and retrofitting homes against flood damage. So, but we also talk about plumbing and foundation too. So we find as we talk about basement flooding is really there are a lot of elements about home maintenance and property maintenance that aren't always top of mind, or maybe they're not always so visible too. So, but for plumbing and foundation, there are things that can be helped in terms of controlling backflows into the home. So we talk about sump pumps and backflow preventers and even lateral drains. We find that the drain that connects your home to a sewer system, the part that's on your private property is the homeowner's responsibility. But it could be a crucial link to it, not only to prevent water from backing up into your home, but allowing the water to flow back out if it does get flooded. We found some homes in Detroit could not drain properly because either the main sewer was damaged or the lateral drains were damaged. Um, in acknowledging that there is something FEMA can do, we have individual assistants did start offering what is called their hazard mitigation program rules and households. So they looked at elements that individual systems can offer grant money for to help repair. So they picked 3 items this year, last year. So repairing roofs, taking mitigation on furnace and hot water heater, and also main electrical panels. So if a disaster is declared and individual assistance is part of that, like it was in Southeast Michigan last year, as individual assistance goes around and looks at homes that are damaged, they can say, "Oh, well, you had a damaged furnace and hot water heater. You also apply for a mitigation grant." So in some award letters, we were seeing $500 to help mitigate furnace and hot water heater damage. So that's a new thing that's coming on, that has come online, and it was available through the Southeast Michigan disaster. So again, that's a mitigation program only if a federal disaster is declared and individual assistance is designated, but that is something to be aware of for the next event. And we also support disaster assistance. So when a disaster occurs and FEMA opens disaster recovery centers, really our goal is to educate applicants as they come in and have questions about individual assistance. We want to educate them about what they can do to mitigate their homes against future losses and damage. So we offer simple handouts that people can take from the mitigation table. Again, largely focused on hot water heater, HVAC systems, backflow preventers, and electrical systems. But we're also trying to move away from just those black and white handouts to a little more visual things that are a little more visually appealing. So we do have infographics and flyers. The one on the left, has QR codes now. So a lot of our guidance is very long, and we can't necessarily print those out, and they're not easily handed out. So we created a QR board. Folks can pull up the guidances through QR codes. So these things you'll see more of when, well, you can share them with your clients, but also it's something that we focus on more for information provide information to disaster survivors as well. I'm not going to take too much longer, but I also wanted to point out that one important component is financial recovery, and we find that insurance is a really important component of that. Flood insurance versus just having homeowners insurance. So the point with the diagram here is that insurance payouts are on average much higher than individual assistance payouts. You can see here from this last event in Southeast Michigan, the average individual assistance payout was around 3,200, whereas the average insurance claim for flood insurance was almost 13,000. So you can see there's magnitudes of difference between flood insurance. So we try to push that as a mitigation option because it's really the best way for a homeowner to become whole or a commercial entity to become whole is through insurance, not through disaster assistance. And again, with disaster assistance, that process, whether SBA or individual assistance, relies on a federally disaster being declared versus national flood insurance. Flood insurance can be available at any laws. You don't have to be in the floodplain. There's no requirement to pay it back, or if a structure is damaged by something and the community participates and the homeowner has a policy, then the policyholder can file a claim. I'm going to skip to this. This just says, well, again, participating, I've mentioned this before, participation in the National Flood Insurance Program is key to accessing other federal financial assistance. So most communities in the Southeast Michigan area do participate, but there are several throughout the state of Michigan that do not. So again, limitations: if a community does not participate in the National Flood Insurance Program, they can't get flood insurance, at least not from the National Flood Insurance Program. And they are limited in disaster financial assistance, in mortgage assistance, and other financial programs. So it's really important to understand that the community leaders, that if they don't participate, they are limited in post-disaster and what's available. I'm going to skip some of this damage assessment stuff, but it will be in the slides. So if a structure is damaged and the property owner has flood insurance, there also is a component of flood insurance called increased cost of compliance. So they could potentially get $30,000 to mitigate their structure, whether it's elevating or relocating. So that's another benefit of a property owner having a national flood insurance policy. All right, I'm going to skip through all that. Okay, so in terms of community grants, so we talked a little bit about grants before. The main practices for grant mitigation are floodproofing commercial historic structures, relocating, elevating, or demolition. So changing the configuration of a structure to make it less prone to flooding is the goal of most of the mitigation grants that we administer. But we're seeing, new programs come online. So the Building Resilient Infrastructure and Communities program, so we have grants that are only available post-disaster, and then grants that are available competitively on a yearly basis. So the BRIC and flood mitigation assistance are available annually, competitively through the region and through FEMA, and then the state set priorities for that. And then anytime a disaster is declared, the hazard, what we call HMGP, Hazard Mitigation Grant Program, is available through the disaster itself. Let's see. So grant criteria for grants, the community or the community tribal entity, They are the sub-applicant. They're the ones, they administer the grant, and then, but it's applied for through the state. The state is the applicant to FEMA. But just some criteria for that: it has to be a permanent and long-term solution. It has to be cost-effective and environmentally sound. I did mention before environmental and historic preservation. It reviews all our grants, not just a hazard mitigation, but all grants that are that go through through FEMA. So, but in the end, a mitigation does work. This is an example of mitigation in Des Plaines, Illinois. This is a huge buyout project where repeatedly flooded area was most of the private properties were bought out through FEMA grants. And just to plug again, I mentioned financial management this is more of on the community side, but it's just as important as disaster management. So the takeaways is that when we educate homeowners about mitigation, there are solutions homeowners themselves can take. And FEMA can help in certain situations. Post-disaster, individual assistance can be offered to homeowners and renters. Also, SBA will have disaster loan programs, which Kathy will talk about. And then technical assistance is available anytime. And really, adequate insurance coverage is key to making an individual property owner whole, or even a renter whole post-disaster, versus relying solely on disaster assistance. And lastly, we can't ignore the health implications of a flood disaster. So preventing mold and mildew, cleaning out a structure post-disaster as soon as possible is critical to avoid long-term health issues from flood damage. I have a host of resource and guidance, and that's it. So I think I kept it to under 20 minutes. Sorry I had to skip some slides, but I will throw it over to Kathy and public assistance. And I think after that, we can look at maybe the chat to see if there are any questions.
Great. Thank you very much, Brian. Good morning, everyone. My name is Katie Warren. I am from FEMA Region 5 Public Assistance. Let's see if everything's working accurately. Okay, there we go. Thank you very much for having us on today. It's always a pleasure of mine to talk about public assistance and where we can help after disasters. So first, for public assistance, Brian talked about, and what people are used to is the individual assistance side, where we knock on doors, talking to families, individuals. How are you? How's your family? How's your house? Public assistance on the other side, we work with local governments, tribal, territorial, and state agencies and state governments to help communities. So public infrastructure, roads, bridges, wastewater treatment plants, debris removal, different things like that. We help with public infrastructure recovery. So next slide, please. So the way this kind of translates to our audience today, specifically MSHDA would be an eligible applicant themselves for public assistance. So if they had any office space, any direct facilities that were damaged from a disaster, flooding, if drywall and carpets had damage, and then any MSHDA run facilities, anything that is the legal responsibility of the applicant, could fall under the public assistance program. However, what we do see in a lot of cases are that any specific MSHDA run facilities typically fall under another federal authority, would be HUD. And then so FEMA is what we like to say the last check. So after HUD, after insurance, after different things like that, we would be the last option for funding after a disaster. So we don't like to duplicate benefits. We can't do that under the law. So anything that's the authority of another federal agency would typically not be eligible for the FEMA Public Assistance Program. So again, that's if like the HUD housing would fall under HUD, but any of their direct like offices, office space, or different things like that might be eligible for the Public Assistance Program. The Public Housing Authority facility is only eligible for permanent work if Congress does not appropriate funds through HUD. Next slide, please. That might be it. Yeah. So like I said, public assistance has kind of more of a smaller role in supporting MSHDA through disasters. We more help the specific office themselves versus who they serve. So pending any questions, that's my briefing for today.
Thanks, Katie. We did have a question about eligibility. So while you're on, let's see. The question was from Veronica about, can FEMA provide a brief review of qualifications to become eligible for disaster funds? And this will go into like the sequence of delivery that we provide under disaster survivor assistance. So is there an age or income requirement? For public assistance, I would say no.
I think this is more of an individual assistance question, but I do also think that there's not an age. I don't know about income, but basically everyone should always apply for FEMA. If FEMA is available in the area after a disaster, always apply and let FEMA go through the eligibility instead of worrying about if the individual is eligible themselves. We always just recommend to apply and talk to FEMA and let FEMA work through the eligibility criteria instead of the individual.
Right. Thanks. And I think this leads me to individual assistance again cannot be on the presentation or the call because of the entire branch was in a training. But this brings us to talking about disaster assistance and what's called the sequence of delivery. Like Katie said, when applicants apply for disaster assistance, one of the key things is that they look at, did the homeowner have insurance? So there, again, you can see here in the top, it says federal assistance may be available for underinsured or uninsured or underinsured needs. So first, they don't want to duplicate benefits. So if you're already getting flood insurance claim payout to repair a damaged home, then there will be probably limited assistance for individual assistance. But again, their individual assistance has their individual and household programs, but also other needs assistance. So there is no age and income requirement for that. But when we start talking about like SBA loans, and Kathy can get into that, there may be, obviously, if you're talking about loans, there may be other requirements in terms of what they look at for an applicant. But I think one of the key things for, at least for individual assistance, is who owns the property. So that's one of the really important documentation requirements, is that who is getting the assistance. It really depends on it. Does the structure you live in, are you the homeowner? Otherwise, maybe in some cases, the landlord would need to apply for the assistance versus the occupant. But again, I'm not an expert on individual assistance, so I don't want to get too into I can't get too in the weeds. I am not familiar enough with that program, but yeah, just to say, in terms of income and age, there are no requirements to apply for disaster assistance. And with that, I'll turn it over to Kathy. She can maybe correct anything that I said, because she knows more about that process than I do. I would believe.
Perhaps so. As far as FEMA's program is concerned, I don't think there's any age requirement for SBA, because we are lenders and you're actually signing a contract to borrow money. You have to be the age of majority, which what that means is you have to be able to legally contract in whatever state there is. Also with FEMA, because the mission is to make sure that everybody has safe, sanitary, and functional housing to qualify if there's a household that has undocumented citizens in it, as long as a child or somebody in the household has a social security number, that provides eligibility. It's different with SBA, again, because we are lenders. We can only lend to people who are here legally. So there's quite a few differences. The whole sequence and delivery concept is to make sure that between organizations like Red Cross and Salvation Army, then FEMA, then SBA and insurance, that we can bring the disaster survivor back to their pre-disaster condition. Nothing can be exactly like it was the day before the hurricane, but careful coordination between all of these different programs helps bring that about. You can go to the next slide, please. Okay, the Small Business Administration, I would swear 99% of everybody in the country thinks that the Small Business Administration only exists to offer um, loans to people who want to start a business or want to consolidate their business debt or want to change their business operation, when in fact there is a component called the Office of Disaster Assistance. And what we do is provide low interest loans to businesses of all sizes, private nonprofits, homeowners, and renters. And these funds are to repair and replace the disaster damaged property that's uninsured or underinsured. So we not only help businesses, but we help homeowners and renters and nonprofits. The reason I want to emphasize homeowners and renters is we are the only program in the Small Business Administration that is allowed to lend to homeowners and renters. And as a matter of fact, there are generally in any community more homeowners, renters, in other words, residents, than there are businesses. So 80% of all of our volume of work comes from homeowners and renters. FEMA's individual assistance program is designed to help homeowners and renters. So that's the component of SBA that we are carefully coordinating. FEMA doesn't really have a program under the individual assistance to help businesses, farmers, people, owners of rental property. So there's always a sector of the population, being business owners and nonprofits, that we are the only program out there to help. Next slide, please. Okay, so the presidential declaration is usually a declaration that's bigger in magnitude. You know, the floods and severe storms that happened in Michigan uh, would certainly be an example. Some of the well-known disasters throughout the United States would be Hurricane Katrina, Hurricane Sandy, recently Hurricane Irma. And every time that FEMA declares a disaster for individual assistance, SBA's administrator declares a disaster under her own authority. And then it makes homeowners, renters, businesses of all sizes, and nonprofits eligible for low interest loans to repair and replace. We go beyond that. So we can go beyond the counties that FEMA declared, and any of the contiguous counties, those are counties that touch the counties that FEMA declared. All of those surrounding counties, we, SBA, can add to our declaration to provide working capital money. We call it economic injury. So economic injury disaster loans are low interest loans designed to provide working capital for the business or the nonprofit to pay bills as if they could have had the disaster not occurred. SBA, with the exception of COVID, and we're going to stay real clear of that. That was an anomaly, one time only. SBA cannot help farmers and ranchers. They are the authority to help farmers and ranchers with their farm and ranch loss of crops, loss of livestock. Should be with the USDA, United States Department of Agriculture, and the farm service agencies, which are the little local offices. With the exception of the farmer's primary residence, because that's a home, then SBA will be able to help the farmer with his or her primary residence. But as far as farmland, um, we are prohibited from doing that. And like I said, the exception of COVID, and if you were involved in applying for any loans for COVID, those were special, one-time only rules. And I don't foresee us ever getting back to um, that particular thing. So that was just a temporary change in the law for COVID purposes. Next slide, please. All right, again, if FEMA declares a disaster for public assistance, then, you know, they're helping the municipality. They're helping with the damage to the public schools and city hall and the damage to the police station and roads and what have you. SBA, at the same time, we will declare the same counties. We won't add anything on this type of declaration, but we will help nonprofit organizations that do not provide critical services. When I say not critical, you know, it's not a hospital, it's not a school, it could be a museum, church, YMCA, art gallery, any type of um, nonprofit such as that. And I kind of didn't say it, but if on the individual assistance side, if we, SBA, are unable to approve the loan for the homeowner and renter, then we would decline the loan, give them reconsideration rights, meaning to appeal and show us where they can pay the loan or they do have um, credit satisfactory to SBA. But in the meantime, we'll refer them back to FEMA for additional grant consideration. In the public assistance arena, if we are unable to help the private nonprofit, we will do the same. We will turn down the nonprofit and we will make a referral to FEMA's public assistance program, which is a little known secret um, to everybody. Next slide, please. Okay, so not all disasters rise to the level of getting a disaster declaration, first of all, but there are times where FEMA, the governor asked FEMA for a declaration and the damage doesn't meet FEMA's criteria. So the governor of the state can appeal to FEMA or he or she can come to SBA and ask for a disaster declaration. Our threshold to get a disaster declaration is just 25 homes and or businesses with 40% or more loss. So it's real easy test. And then when it's SBA only declaration, we provide the same type of assistance that we would under an individual assistance declaration, meaning we provide low interest disaster loans to repair and replace physical damages. This is for businesses of all sizes, private nonprofit organizations, homeowners and renters. And then we also provide economic injury disaster loans to small businesses, small agricultural cooperatives, small aquaculture businesses, and most nonprofits. And why we say most is religious organizations such as churches are not eligible for these working capital loans. Okay, the difference is that if FEMA doesn't declare it, the governor can ask SBA only, or the governor can come to SBA only when it's a smaller declaration. We are all the time in New England for apartment fires. You could have one building, 24 units, one owner, And that would be sufficient to get an SBA declaration if those 24 unit owners and the one business owner had 40% or more uncompensated loss, meaning uninsured loss. Next slide, please. Okay, so you want to know how much people can borrow. For the repair and replacement costs, businesses can borrow up to $2 million. For the working capital loans to keep the business in operation, those are called the economic injury, they can borrow up to $2 million. For a homeowner, can borrow up to $200,000 to repair and replace their home. And that would include fencing, if they had a detached garage, things such as that. And then a homeowner renter can borrow up to $40,000 to repair and replace their contents, including automobiles. I am proud to say that things have changed over my 30-year tenure with SBA. When I first started with the agency, my first disaster was a flood in West Virginia. And people would apply and they would say, now can we elevate our structure over the creek so we won't get flooded again? And I had to say, not unless it is a code required improvement, because we didn't allow any funds for improvements and mitigation. Those funds for protective elements were considered an improvement. So now we can allow homeowner or business to borrow up to 20% of the verified loss as determined by SBA just for protective improvements. So they can increase their loan for elevation, for installation of storm drains, installation of hurricane shutters, tie down straps, a host of things. And that is to help not only protect the individual and the business owner, but to also prevent them from having to apply for help in the future. You know, anytime that we can help homeowners and businesses improve the property so that they don't have to borrow, then that's just better overall around the country. You know, we love you, but we don't want repeat business. And yes, people can have more than one disaster loan. They can have a disaster loan for each and every disaster that's declared, but that's not what we want to do. Nowadays, we want to teach disaster preparedness, and we want to encourage people to increase their loan request to get funds just for mitigation. Next slide, please. Okay, so what does it take to get approved? You have to be eligible. Eligible means that you are in a declared county and it's your stuff, your home, your truck, your business. Believe it or not, there's some people that come around and they're like, oh yeah, this is my house, and it's abandoned property. Credit history has to be acceptable to SBA. Not using credit score. We look at credit history. I can't tell you the magic combination. What I can tell you is that people that haven't paid their SBA loan or a federal debt and they don't have a repayment agreement in place, that's a problem. If they haven't paid their child support and they're more than 60 days delinquent, that's a problem. Repayment ability. We have to be able to show that the individual, whether it's a homeowner, renter, uh, or business or nonprofit, can repay the loan in addition to their other debts and obligations. Now, the good thing to know about this is if you are a homeowner or renter and you get declined for any reason, then SBA will refer your case back to FEMA. However, if you're a homeowner, renter, business, or nonprofit, you also will see in your letter the reason for the decline and be given up to 6 months to ask for reconsideration. You say, well, How can that happen? How can they get approved if they were declined for bad credit? Well, let's say that the credit situation was they were delinquent on their student loan, but they've called the collection agency and they've made repayment arrangements. And within that 6 months, they showed that, they're paying on time with the new agreement. They just needed a lower loan payment or whatever the situation is. They send that in with a reconsideration request. We'll take another look at it. Same way for lack of repayment ability. Maybe just one partner applied, maybe one spouse applied, and the other income was not included because that person didn't sign the loan application. Well, if they ask for reconsideration in writing and add the other person, then we can include that income and possibly show repayment ability. Next slide, please. Okay, so what does it take? Mainly, we want everybody to first register with FEMA, disasterassistance.gov. And then if they're referred to SBA, to submit a loan application. Don't have people sit there and say, there's no way I can approve a loan. Why? Because we can turn them down if we agree, and we would refer the individual, being homeowner, renter, back to FEMA for assistance. Sometimes there's even business grants that come around, but the business grants are only issued to people that did not get approved for an SBA loan. So we encourage everybody to apply. And there's no obligation to take the loan if it's offered. And there's no cost to apply except the time it takes to submit the information. Now, if it is an SBA only disaster declaration, then of course you would not first register with FEMA. Individuals will come to SBA centers or register online and apply with us online. Next slide, please. Okay, I think we skipped one, or else I did the slides wrong. There you go. Beg your pardon. Okay, so you submit the loan application, then we have to review credit, we have to review income, which is really repayment ability. And then if everything's okay, our verifiers are going to estimate the damages that occurred. Then we're going to send the file to the loan officer. The loan officer is going to determine eligibility. We're going to look at what the inspector said were the damages, deduct any thing that is received from insurance or FEMA at that point, and set up the loan terms. It generally takes 2 to 3 weeks just to get a loan decision, whether it's approved, declined, withdrawn. Next slide, please. All right, and then you can't get the money until you sign the documents. That is my number one question. Everybody goes, okay, I've applied, so how long till I get the money? Well, we have to have you sign loan closing documents. One of the documents is a loan authorization agreement, tells the rules for getting SBA loan and how you're supposed to spend the money. Another document is a promissory note. So it's not until those documents and whatever other requirements there are submitted back to SBA and attorneys review it, that we can order a first disbursement. The first disbursement is usually $25,000. Next slide, please. Okay. Again, we don't want repeat business, so often we are going to require hazard insurance, which is like your traditional homeowners or business insurance, and sometimes flood insurance if they're in a special flood hazard area, to help protect the borrower, at this point we call them, from having to apply again, because the first form of recovery is insurance. Next slide, please. Okay, you can borrow as much as $25,000 for a repair and replacement loan without having to pledge collateral. If you are a small business, you can get up to $25,000 for repairing and replacing and another $25,000 for working capital loans to pay the bills as if the disaster had not occurred. In other words, to keep the business in operation. So a small business can get as much as $50,000 without pledging collateral, which is very unusual for anybody. If somebody doesn't own real estate, it doesn't mean that we will not lend them above the $25,000 threshold for collateral. We can take business assets, we can take vans and dump trucks and machinery and equipment, all kinds of stuff. So that's another thing. Don't count yourself out thinking, well, I don't own any real estate, they're not going to help me. We are not like a traditional bank. We are considered cash flow lenders. Our terms are more lenient. As a matter of fact, the first payment due is postponed 4 months from the date on the promissory note, not from the date when you finish construction, not from the date that you have your first kid, not from the date you got all the money. It's 4 months without having to pay from the date on the promissory note. So that gives you 4 months without having to make payments that you can make for repairs. And your first payment will be due on the 5th month. Next slide, please. Ooh, I'm running long. Okay, interest rates are determined quarterly. And so you have to look at the information for your particular disaster to see what the interest rates are. Currently, the home loans are about 1.438. Business is about 2.5. Nonprofits about 2.25. So lower interest rates, the terms can be as long as 30 years if necessary. And in some cases, we can refinance mortgages to help make the loan affordable. Next slide, please. Okay. You can apply online, and there will always be the URL, the website to go to. Next slide, please. Okay, we have people to help businesses and nonprofits construct financial information if they need help. Next slide, please. Okay, and our toll-free number, 800-659-2955, 711 for hearing impaired. Next slide. Okay, so the lessons learned. The Small Business Administration has a low interest loan program for homeowners, renters, small businesses and businesses of all sizes, and nonprofit organizations. Don't count yourself out. Apply, 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 because we might not be able to help you, but we might be able to refer you to another organization that can. These are not like bank loans, so don't pretend like you know what kind of credit we require or how things go. Just apply, apply, apply. No obligation to take the loan if offered. No cost to apply. And thank you.
Well, thank you all, Brian, Katie, Mary. Thank you all so much for the resources, your expertise in disasters. Our agencies are experiencing some of those clients that have come in and looking for resources. So this is very valuable and helpful for each of our agencies to know who to contact and reach out to. So thank you all so much for your presentations. If you don't mind, I believe somebody had asked earlier, I guess I could quit sharing my screen here. Somebody had asked earlier about the links and the resources, Brian, your handouts. If you wouldn't mind Okay, I just completely was probably talking and nothing was
Yeah,
happening.
just lost audio. But yeah, I will send the slides as a PDF to you. Yeah.
Perfect. And we will get those sent out to our agencies. And again, sorry if I was not on camera or my microphone was muted, but thank you very much for presenting, Brian, Katie, Mary. We greatly appreciate your resources. We hope you all have a great weekend. And Brian, Katie, Mary, if you have any final thoughts, words, please go ahead.
I'll let you go first.
Yeah, I think I would say that when we talk a lot about disasters, it doesn't mean it has to be federally declared. There are resources and technical assistance available for, non-federally declared damages. So just keep that in mind, whether it's flood insurance or the only time a lot of this kicks in for federally declared is it would be PA or IA and disaster and in some cases SBA. So
Great. Well, we will let everybody go a few minutes early here. One thing that I would like to mention to our grantees is partnership profiles were due. If you have modifications that need to be addressed, please get those into us. We are looking at July 1st for our grant start dates. And if your partnership profile is not approved yet, we're not able to send you your grant agreement. So if you could get those in, make sure that you do so. So have a great rest of your week. Thank you so
Hey,
much for
Tara,
joining. Yes.
real quick, Anna had a question about loan value. I'm
Okay.
not sure if Kathy, you can speak to loan value
Oh, I'm
that can be
sorry. I missed
approved.
that in the
That's
chat.
okay. It came in late.
Yeah.
Okay, I don't know exactly what that means, but if what you're asking is, do you have to have enough equity in a loan? Then the answer is no. We are cash flow lenders. If you just bought a house and you put $5,000 down and you have a loan for 50,000, SBA will take the house as collateral without a problem, because we know that disasters happen in opportune times. So nobody should count theirself out. Don't pretend, any of your, residents and homeowners and businesses, don't count yourself out. Let the agencies make the determination whether or not you're eligible, regardless of credit, regardless of repayment ability, collateral, whatever. Because it's, you know, it's not an easy program to understand all of the rules, and that's why we're here.
Yeah, and I think maybe are there limits on the loan? Like, is there a max on the loan, max or minimum on loan that can be serviced?
Okay, I went kind of really fast through that, but essentially with businesses, it's up to $2 million. For a homeowner, it's up to 200,000 for the real estate losses. That would be the home and, you know, uh, landscaping, etc. And for homeowners and renters, it's up to $40,000 for repairing and replacing contents. And then plus 20% above the verified loss, and of the verified loss to add to the loan for mitigation improvements. It's a really smart thing. Statistics, and Brian probably has it more than I do, but statistics have proved that every dollar that you inject into making an improvement saves you $6 in disaster losses. So that's a great return. And with the lower interest rates of disaster loans And the fact that we don't care if we're in second, third, 19th position, whereas banks would, it's a good time to get into making protective improvements. But the main thing I would say, and I don't mean to go over, but please, please help people understand they're being referred from FEMA to the Small Business Administration because we are the agency that has the authority under Congress to make low interest loans to homeowners, renters, businesses of all sizes, and nonprofits. So it doesn't mean they're being referred because we think they have a business. We know they don't. But we are the agency that has the program that can help uh, for their long-term recovery needs. So if you help them navigate and understand that, that's 90% of the battle.
Yes, thank you again. And again, we'll send out the recording. The webinar was recorded today, so we'll send those out, and also the presentation from Brian and Mary. So again, thank you. We hope to talk to you all soon, and have a great rest of your week. And thank you again for the presentations.
Thanks,
Thank
Sarah. Thanks,
you.
everyone. Take care.
Yes,
Have
okay.
a good 4th, everybody.
Bye.
Thank you.
Thank
Bye-bye.
you.